Okay, recording this video is Sunday 20th of July 2014. Hope you're having a good weekend. Well, one of the most frequent questions I get about Better Pro-Am, which is my indicator that plots professional and amateur bars on my charts, is how do you know if the professionals are buying or selling? Now, there's already a video on the site that kind of answers this question, but I don't think it's very good. The answer is kind of buried deep in that video, so I think it's time to re-record a video and kind of get this a lot more crisp in terms of the answer to the questions. And it's good timing because on Wednesday I put out a video talking about a last roll of the dice signal that the professionals were getting short into the highs on Wednesday in the middle and the end of the day, and we had a really nice big kind of sell-off on Thursday. And as a result of that video, got a question from Lloyd asking about that signal. He said, "Hello Barry, how do you know whether the pro bars at the highs are initiating shorts or closing longs? One is bearish, the other is neutral until they re-enter the market. Does the indicator have the ability to distinguish that somehow?" Well, I'll answer that, Lloyd, in this video. The quick answer is the Pro-Am itself, no. It's where it takes place that's important, and you can actually tell whether it's buying or selling by looking at better momentum. But let me go through this presentation. So the first thing to note about the signals on Better Pro-Am is that people tend to overcomplicate how to interpret the professional and the amateur bars. It's not that complicated. First of all, professionals are professionals because they're profitable. They trade in size and they buy low and sell high. Amateurs are doing the reverse. They're trading low average trade size, they tend to be unprofitable, and they're buying high and selling low. Some people don't like it when I refer to these people as amateurs. They find that a derogatory term, but we need a way of distinguishing between good traders and bad traders, and good trading and bad trading. The amateurs are doing the wrong thing at the wrong places, and I'll show you that on these charts. The last thing to note in terms of not overcomplicating this, if you don't know what's going on, wait for confirmation. Wait for breaks of highs or lows, or wait for breaks of congestion patterns, because then you'll be able to interpret what the professionals and amateurs were doing that was right and wrong. Professionals, a couple of points to make. First of all, they're moving very large positions, and that's difficult and it requires time. So it takes time to accumulate positions, kind of going long, and distribute positions at highs, and then the reverse of that when they're kind of going short. All of that process takes some time, so you don't find that the professionals are kind of turning on a dime, and that's why highs and lows tend to be made quite slowly, and it takes time for a market to reverse. They also tend to trade early because they're trading into predetermined price ranges where they're taking profits and then they're reversing their positions. So that's just understanding the complexity, the difficulties that they have because they're trading such large positions. This is a stylized view of a turning point, and these are kind of it's a head and shoulders movement here. We've got a left shoulder being made, then a head being made, and then a right shoulder being made, and a sell-off. So this is an uptrend that's turning into a downtrend. And what you see just in a very stylized way is professionals and amateurs working at different places, doing different things at different points in this transition. So let me walk you through this. So as we're breaking out to new highs and kind of going into this turning point, what you'll find is a whole bunch at an exhaustion point, usually on a left shoulder, of professionals taking profits. In this case we're in an uptrend, so taking profits into new highs, and they do this with resting sell orders. So they've decided the price point at which they're happy to take profits. They have resting sell orders there in order to profit take, and as the market moves into that, they're taking profits and getting out and going flat. Sometimes they might be starting to initiate short positions at that point, but they tend to be initiating the short positions later on as they transition. First of all, they have to get out of their long trades and they take profits with resting sell orders. Then what we normally have is maybe the sell-off is a little bit exaggerated, it's a little bit kind of severe to start with, and as soon as we start moving down quite quickly, you'll see amateurs trying to get short too early. So all of their moving averages will have turned over, they'll be looking at this retracement from the highs, and it'll be reaching some kind of Fibonacci level or some kind of level where it's not just a little shallow retrace, it's a fairly heavy retrace. And on that retrace, the amateurs start getting short there because they think they're chasing the market. They think all of a sudden this market has reversed and gone the other way, need to get on board, and they're shorting at that extreme. They usually get that wrong. They're shorting too early. And then what happens is we bounce back up. We might break to new highs here, and at that point, as we're breaking new highs, all of their stops get run, they get taken out of their positions, and as we're breaking to new highs here, we might see something like a Rambo pattern, which is a potential reversal of an amateur breakout. So the amateurs here, their stops are being run at that point because they put their stops just a fraction above the previous high here, or they might be working on the E-mini with maybe 1.5 or 2 point stops on their trade. As soon as we kind of breaking up here, they're being run on their stops, and then they're thinking, well, this is continuing in an uptrend. All of a sudden we're breaking to new highs, I might as well get long as well, and so they're buying that breakout. So they're either being stopped out or they're buying this breakout to new highs here. They get that wrong because the professionals have already seen this as an area where they want to take profits, reverse the market, and go the other way. Then you might see a couple of professional bars after that kind of getting short. We know the professionals are getting short at this point because they're breaking the lows of those bars. If this were getting long into a little dip, into a little retrace here, the market would continue through the highs of those bars and we'd be breaking to new highs. But no, we start to break down, and that's the first place where they're really properly getting short. They might have taken a couple of short orders over here, but this is where they're really starting to get short. This is profit taking and just going flat. This is more likely to be going short and also a little bit of profit taking here. Then, as we start to move down again, these amateurs who've been buying this breakout are getting stopped out again. So the amateurs might be getting short at this point here. They might be trading with tight stoppers again. So on those long trades, they're being stopped out of those positions again. You'll start to see more kind of amateurs kind of down here at these lows. We have a little bit of a bounce back, and this is what we saw on Wednesday's trade. This is what I call a last roll of the dice. As we bounce back again, you know, the amateurs are getting confused. We're in this congestion zone here. They're always ping-ponging backwards and forwards, buying these breakouts at these congestion highs and lows. They tend to be expecting a breakdown or a break up into an uptrend or a downtrend. The professionals at these points here are trading the reversal, so they're expecting at those highs and lows for us to kind of keep in congestion until we really have a proper breakdown. So we come back up again. The amateurs get stopped out because they've used, you know, really tight stops up here. They might be thinking, oh, this is going up to new highs again, kind of going long or whatever. But then we see a last kind of, as I call this, a last roll of the dice. This is professionals getting short at this point. They've taken profits on their long trades here. They've then kind of started to reverse here. This is their last opportunity to load up on shorts, and we know it's a reversal trade because the lows of those blue professional bars get broken and we break down into a downtrend at this point. So there we go. Professional and amateur activity at a turning point. You can see the professionals are measured. They take their time about this. They know where they're going to be getting in and getting out. They know where they're going to be exiting their longs and getting short. The amateurs are getting confused by this ranging kind of congestion activity. They're doing the wrong things. They're kind of expecting breakouts and breakdowns and getting taken out of their positions way too early with tight stops. So there we go. That's a stylized way of looking at what the professionals and amateurs are doing, and I'm going to show you Wednesday to Friday's activity based on those blue professional bars and the amateur bars as well. Now, last couple of points just to make. On professional bars, you'll see a bunch of professional bars right at the open. A couple, you know, maybe one or two before the open on a 1500 tip bar chart, one or two at the open on a 1500 tip bar chart. I don't find it very easy to kind of understand what the professional are doing right at the open. The professional activity that happens right at the open tends to be trading to the very end of the day. So there's a whole bunch of kind of orders gone in there, and you don't really know exactly what you're doing, what they're doing, whether they're going short or long at the open. I find it more instructive to wait to the first blue professional bar on the 1500 tip bar chart after the open to see exactly where they're starting to what they're planning on doing for the first kind of trending move of the day. So just be aware of that. Professional bars at the open are difficult to read. They're also very difficult to read at the close. At the close of the day, they're closing out. Remember, the E-mini is predominantly a day trading vehicle. I think I've shown that with a bunch of analysis that I've done in terms of the churn and the number of contracts traded and so on during the day. Day trading is the order of the day for the E-mini. So at the close of the day, they're just getting flat on their positions. Whatever they've done, they're taking profits and so on. So they're getting flat. So again, at the end of the day, professional bars are a little bit kind of not that instructive as to what the trend is doing. Second thing to say, Better momentum shows the net buying and selling. So I'll be able to show you on Wednesday's activity what better momentum was doing. You can actually see that into that last roll of the dice they were actually getting short at that point. So I'll show you that chart in a second. And then lastly, the higher the time frame chart that you look at, the signals become more significant. So on low time frame charts, 500 tip bar charts and so on, you'll see a lot of blue professional bars and amateur bars at different points in time. There's a lot more of those signals kind of going on. They're helpful to show you, different turning points on those lower time frames, but the more you move up the time frames, the more significant those signals are, because the average trade size goes up and up as you go up in those higher time frames, and so those signals become more significant. So having said that, let me show you this Wednesday to Friday's activity with Better Pro-Am. That's all I've got on this chart here. So this is the 4,500 tip bar chart, so I've kind of bumped it up one time frame from my normal 1,500 tip bar time frame for kind of reference on day trading, because then you'll be able to see the really significant professional and amateur bars. Then we've got the open and the close and the open at each of these days. So this is Wednesday's trade, open to close, Thursday's trade where we got this really nice little sell-off, open to close, and then the bounce that we got on Friday, open to close. So this is what I see going on with the blue professional bars and the amateur bars kind of going on here. This is the activity that I saw on Wednesday coming into the close during the afternoon. All these blue professional bars up at these highs here. Let me just zero in on this fraction so you can see that kind of going on. So there are these blue professional bars coming in on Wednesday afternoon's trade at those highs. It's after we've kind of peaked out the market kind of at the beginning of the day, and that's what I call a last roll of the dice. That's the professionals using that as a last opportunity to kind of get short. Remember, they've taken profits into previous highs as we made this kind of whole rolling over maneuver, and then because we're breaking the lows of those blue professional bars, that little kind of congestion pattern there, bang, we know that they're getting short into that move. Now overnight we have a really deep dive. Now it's being led by the amateurs here at the beginning of the day. Again, one of the things I should caution you, the blue professional bars right at the open and right at the close, difficult to interpret on Better Pro-Am on the professional bars. As soon as the market starts to trade in the after hours, Better Pro-Am needs to recalibrate for the first 20-30 minutes of trade. So those first initial bars that you'll see in the after hours, Better Pro-Am is kind of recalibrating what the average trade size is to understand professional versus amateur activity. So just be wary of those. They're certainly low average trade size, and so from that perspective they're amateur bars, but just be wary about trading that immediately after the close. We've had our big activity during the day, we're waiting and waiting. This was set off by the European activity on their Thursday morning, and then remember the US market's not going to be pushed around by the rest of the world. The US market will do what it's going to do. The professionals will trade the US market the way they want to trade it. Just because the European market sold off on that Thursday morning, the professionals aren't going to jump on board and just sell the E-mini straight away. They're going to say, no, I want to trade this at a decent price. I'm going to force this market all the way back to where we were getting short on the Wednesday afternoon and back into that level, and that's where I'm going to go short. I'm not going to follow the the European lead and just short it right down. We're just going to have a down day from the very open. They moved it all the way back in to that area where the blue professional bars were on the Wednesday, and that's where they shorted it. So my interpretation of what's going on here is we're breaking up these highs. So these professional bars, as we're moving back into here, they are taking profits on any long trades they've got on, and they're starting to get short, and then they get short into that same place where they were getting short at last roll of the dice there, and then bang, we sell off. Now, as this move kind of starts to break to new lows for the day, you can see the open of the day, that's kind of new low. Here we get amateurs with an amateur down bar and a Rambo pattern. So these are the amateurs getting short into new lows because they're way late. They're way too late here. In fact, they were buying this kind of up bar, amateur up bar here, testing back up, getting wrong-footed. At this point down here, they're realizing it's going to be a down day, although it's been up for the morning and kind of selling off here, and they're just jumping on board because it's breaking to new lows, and they're desperate to get on board a trending move that they see kind of just going forever. Of course, no, the market sells off by another couple of points, and then the professionals step back in. So when that blue professional down bar kind of comes in here, the professionals are starting to pick it up, get rid of their short trades. By the time they put in this activity here, they've taken off more of their short trades, and the market can rally back. The amateurs are confused. They're like, this all of a sudden started to break to new lows. Now I put my my stop a couple of points above the high of this bar as I was getting short. I'm kind of confused. We get to this point here, the professionals step in again. We've had a nice little 50% retrace of this move. The professionals come back in at 70, bang, and sell it down again. Now they're loading up on their shorts, kind of going down here. So the professionals getting short here, we know they're getting short because the lows get taken out. If it was professional activity and buying those dips, we would have the market kind of advancing, which is what was happening here. They were buying, anxious, this is a little bit of a U-turn here, anxious to buy some more, and then at this point here they're getting out, getting short, and it kind of continues down. Now by the end of the day, we've had a massive down day. Really good for the professionals. The professionals start taking profits all the way here. I mean, the low of the day is at 50, but they're starting to take profits at 57, 58, kind of up here. They're quite happy. They've got big positions they've got to reverse. As the market's moving down, they're taking profits as they're moving there, with resting buy orders kind of going in. At the end of the day, they clear out the positions, they go flat, and that's why we see a lot of activity kind of going into the close there. Then overnight, more kind of amateur bars kind of breaking to new lows. Again, this is better pro-am recalibrating on amateur bars. It's definitely low average trade size, and the amateurs thinking, well, this thing is over, we're going to break to new lows, getting wrong-footed again with Rambo patterns in the overnight session. And then Friday's activity, we have a rally back up to somewhere north of this little kind of point where they were kind of getting short. Here are the blue professional bars at the open. A little bit confusing to understand what exactly they're doing there, but as soon as we start to hold the lows of those blue professional bars, we test back into it a couple of times, bang bang, and then we kind of break out to new highs. This is breaking out above this congestion zone here, and the blue professional bars are getting on board. Remember, at that point there, they're not taking profits. They're taking profits up here. On this little retrace, you can see the professionals are buying that dip. They're getting out at the end of the day. This is buying the breakout because they're seeing this market going up. It's going to confuse everybody, and then of course here are the people it confuses the most, the amateurs, right at the high of the day with a Rambo pattern. So the amateurs, all of a sudden, it's taken them that long during the day to realize, my God, we're actually going up. This is breakout, because they were going short all the time. And they're going long right at the highs of the day, just crazy stuff. But that's kind of amateur activity for you. So there we go, a little bit of a recap of what happened over the last 3 days, just showing where the professionals are active and the amateurs are active, and try and understand what's going on there. Every day is different. The last chart I'm going to show you is just the last roll of the dice, and this comment about better momentum. Better momentum, remember, is measuring demand and supply. It's kind of the net activity of longs and shorts kind of going on. And on Wednesday's afternoon's activity, I showed you this on the video on Wednesday with these blue professional bars on the 4,500 tip bar chart. I said those are very significant. That's a last roll of the dice kind of going on there. Blue professional up bars into those highs, the lows get broken, and then this is the activity overnight, and then come the open the next day we test back into that level and sell off again. But this is the point on better momentum here. Better momentum is calculating that kind of net buying and net shorting activity. Into those little rises there, you can see better momentum was negative. So the net of all of the professional activity up there was shorting. So that, taking a long way to respond to Lloyd's email in terms of, is there a way of determining whether it was buying or selling? Not Pro-Am itself. Look at where it is in terms of the overall activity. If I just refer back to this schematic, on the left shoulders and the head, they're more likely to be resting sell orders, and they're taking profits at this point. By the time the move starts to roll over, later in the day, they're getting short here. So if you like, they're kind of profit taking and sell orders here, and as we progress through this turning point, they're more likely to be short orders and short orders at the end of the last roll of the dice into the move here. So the further we progress through that turning point, it turns into from sell orders to short orders here. So profit taking to actually initiating positions short. So We know that going up into those highs, Better Momentum was negative, therefore they were net sellers at that point. And if I just go down, back it down one time frame to the 13,500 time frame, there's that Wednesday's activity, there's those blue professional bars, and you can see Better Momentum again was negative at that point. What you'll find is Better Momentum is positive on the way up when you see exhaustion patterns and blue professional bars, but as soon as we start to roll over, and this move has taken a while to kind of roll over here to here, and you can see, a lot of the blue professional bar signals that we had later in the day here, they were kind of positive, but as soon as we started to max out and turn the other way, that testing activity was negative. They were shorting going into that. So there we go, a little bit of detail on how to interpret the blue professional and the yellow amateur bars on a Better Pro-Am. And I hope that was helpful to you.